What have we seen with Bitcoin and what have we seen with crypto? Humans like more volatility, more risk, more upside. And that only comes with things that are unpredictable.
Be greedy when others are fearful.
Volatility is an asset. Volatility is a feature. It's so powerful, it can change your entire economic future. The truest essence of what Bitcoin is, it's equal access to everyone. If you own a computer, you can dedicate its processing power and earn money in the form of Bitcoin. That is the birth of Bitcoin.
Today, we have a guest whose life story is a playbook on radical transformation. He went from dominating the gridiron under the roar of 100,000 fans to architecting the silent, emotionless precision of trading algorithms. He's a former All-American powerhouse from the University of Texas who knew what it takes to execute under pressure. Now he's the CEO of Arch Public, a company on a mission to put a hedge fund in your pocket and level the financial playing field for all of us. He went from protecting the quarterback to protecting your capital. Get ready to learn how discipline forged into elite athletics is the ultimate weapon that we're going to see with Bitcoin and crypto. So please welcome the founder, the Lido, the Bitcoin visionary, Tillman Holloway. Thank you for being on the podcast today.
My pleasure. What a hell of an intro. I don't think I've had a better one. So yeah, thank you for that. It's quite the welcome.
Yeah, no, it's an honor to have you. And I know your journey is incredible. You played offensive line at the University of Texas. And I know that's a position, and that's all about brutal discipline and seeing patterns and chaos. How much of your success in crypto is just being that all-American lineman, but on a different digital field?
I think success is about failing without hesitation. And, you have to learn from your failures. And a lot of people, I think, are just scared about failing. And I think football teaches you to be accountable to your failures. Every single practice is filmed from these big scissor lifts. They have film crews up there. And during, the next day's practice, right before we go out, we watch film as a team. And the coaches have this saying that the eye in the sky don't lie. And it's essentially you're accountable for every step that you take when you put yourself on that field. And you either treat it like a business or you don't. And so that a level of accountability, that level of scrutiny, I think does carry into every aspect of life. It's like, who do you want to be? And someone is watching whether you think they are or not is essentially the bottom line.
Yeah, I know the world of high stakes college football and especially early Bitcoin. Both of those are intense, high conviction communities. What do you think was the single moment or realization that made you pivot, that made you say, this Bitcoin thing, I know it's early, but this is the next game that I have to play in?
I really had a high drive for entrepreneurism straight out of college, and I wanted to start businesses, and I did. And I started a construction business. It was very successful, and then we had the 2008 crisis. I was very fortunate when I grew up. I grew up in a well-off family. My dad was a serial entrepreneur and a businessman at his core, lawyer, CPA. And so I got to see kind of the art of the deal because he was always involved in deals. And so I got out of college looking to do the same thing, and I did. It was an real estate crisis hit, and it took the company out. I didn't have to file bankruptcy, but it took me down to a level financially that was uncomfortable, to say the least. And it taught me how quickly you can go from being the belle of the ball as it pertains to getting loans and banks, and they all fight for your services or for your business, to going to being essentially getting called every day and loans being called. Those are very, very different feelings. And so this notion that the banks are only there for the people that don't need them really started to get ingrained in my psyche. And I found Bitcoin, and it's in the truest essence of what Bitcoin is, it's equal access to everyone. If you own a computer, you can dedicate its processing power and earn money in the form of Bitcoin. That is the birth of Bitcoin. And so I became a miner, and I fell in love with this notion that we could take 6 billion unbanked people in the world and give them a bank account without a piece of paper being filled out, without the scrutiny of walking into a lobby and essentially the bank telling you whether they want your business or not. I don't think that that's something that helps global economies. I think that that is friction in the system. And I think that if we remove that friction, it's not only good for the people on the other side of that now have access, but it's also good for the global economy. It's good for the world. It's good for everyone.
Yeah, I love that. And I know your mission at Arch Public is to give everyone a hedge fund in their pocket. And that's a pretty powerful disruptive statement. What do you think was the moment that you saw that the average investor was getting a raw deal and made in your mind that like I have to build this?
Technology, just like Bitcoin, breaks down barriers of access.
Mm.
And if you talk to any professional trader, if you go to any major hedge fund, if you go to any major broker dealer, all of them are using automation. Like high frequency trading is 70+% of the volume that exists in the market. So if you have this technology that all of the big ones are big, players are using, and yet there's literally not a company that's offering it to retail, you have to scratch your head and go like, why? What's the problems that keep it from being offered from retail? Or is this just a closed community where you don't get access because it's all built on proprietary systems and they don't want you to have access to their proprietary systems? That's what attracts investors. If you're a hedge fund and I have a proprietary piece of trading software that is very good at what it does, guess what? I am getting a percentage of the money that I manage in my fund. So is it in my interest to go share with the world something that allows me to essentially raise money inside my own fund and trade more capital? Of course not. So they're very closed walled systems and the technology hasn't been given to the retail consumer. But the reality of it is most people fail in trading because they're emotional, because trading is a highly emotional activity. And when you're up a lot, you think you're scared to sell because you're going to miss the big spike. And when you're down a lot, you think you're scared to sell because it's a finality that you failed and you have to swallow the losses and you keep telling yourself, oh, it's going to come back. So there's just a psychology to trading that takes years to master. And it is something similar to like being on the football field. My freshman year, I was throwing up before the games in the locker room because I was so nervous about going out and playing in front of the TVs and all that. But by your senior year, you don't even hear the crowd. You don't see the crowd. You don't think you're on TV. You're in your own little universe doing the things that you've been trained to do. And so that type of discipline doesn't come cheap. That type of training doesn't come cheap. It's you being out there every day in those high pressure environments. So equate that to trading and say, do I want to go through a bunch of heartache to learn these lessons that I have to learn in order to quote be a good trader? And the answer with automation is resounding no. You can absolutely come up with a strategy that you want to deploy, and you can come up with it outside of emotion. And you can say to yourself, for example, our Bitcoin arbitrage strategy is very simple. If you want to own Bitcoin, the question is how do you buy it? Do you buy it in one lump sum or do you spread those purchases out over a long period of time? Well, any prudent advisor will tell you that you spread it out over a long period of time. You dollar cost average into your position. Well, the next question to ask is, are you arbitrarily picking those time periods to dollar cost average? Are you picking Tuesday at 9 a.m. for any specific reason other than it's when you're sitting at your computer and it's convenient for you? Yes, that's how most people do it. Well, software can say, you know what? I want to buy on the healthy dips, but I want to wait until the market actually dips to buy. Well, if you're waiting for the market to dip, there's a couple of options. You can wait in front of your computer in the crypto markets and wait for the dips and manually do that, or you can just set a piece of automation and forget about it. And when the dips happen, you buy a little bit. And that type of discipline and that type of unemotional execution, it gives retail traders a huge advantage. It gives them something that works for them within their lifestyle that doesn't induce an additional amount of stress and really takes advantage of the market conditions when they present themselves, even if it's 2 a.m. or they're picking up their kids from school or whatever they're doing in their normal life.
Yeah, that's so important. And I think every individual needs to understand this is that there's this, evolutionary psychology that's in our brain, and when it comes to money, it really plays out that lizard brain of ours. We can't handle it. We get the fear of missing out. And there's all these different things that begin to happen. And so it's so awesome. And I want to kind of get into I know about the tech and I know you offer a Bitcoin arbitrage algorithm. And I know that sounds like it codifies the ultimate trading mantra, be greedy when others are fearful. How do you translate what you just talked about, the complex human emotions and the market timing into cold hard effective code. How did you, without giving away too much, how did you come up with the algorithm?
Yeah, very simply, I started backwards of what problems do I want to solve. So one problem that I saw in myself as a manual trader is I always waited to start selling my position after the blow off top and on the downside. Well, there's some disadvantages to selling positions in red candles. You're one of many sellers and there's fewer buyers. That's why it's a red candle. Right. Yeah. So in an optimal situation, you would want to exit on giant green candles. So if you watch our trading software, you always exit on giant green candles and you always enter on giant red candles. And there are indicators that can tell you when markets are getting exhausted because it's a function of a lot of math, but it boils down to really two specific indicators: the volume that's being traded and the price movement against that volume. Those are really the nucleus of why markets do what they do. And so when you say, okay, I want to trigger a trade through automation, well, when do I want to trigger it? Well, I want to trigger a buy when the volume's maxed out and you're starting to see diminished volume on a giant red candle. What does it tell you? Still tells you that there's plenty of volume in the red candle to put your buy order in against, which means you get instant fills, great fill prices, and you most of the time are literally buying at the absolute bottom of the red candle. Now, you can then back some additional safety parameters in there and say, okay, well, let's close on the body close of the candle and not on the wick. So that gives you a little bit of buffer. So it's just a process of looking at how would I want in a perfect world to execute this trade, and then you write the code to do that. And so the picture's worth 1,000 words. If you go to our website, you can see what I'm talking about. But you never buy on a green candle ever with our piece of software. It never does that. And that's something that is exceptionally difficult to pull off as a manual trader. Exceptionally difficult.
Yeah, I could imagine. And, we have a lot of tech leaders that listen to the podcast. And so they already probably bought, we have a lot of them mention Bitcoin, bought into stable coins, all that. But let's say that they're buying, like you said, they're buying weekly and they're already fairly disciplined in the sense of just buying it weekly. They're not looking at candles or anything else. What is the superpower they can unlock by using your DCA tool?
Well, but buying weekly, again, that's an arbitrary way to buy. There's no rhyme or reason. There's no price discount. And so let's go back to the mentality and the psychology of trading that we talked about earlier. Why is it that when your favorite clothing brand goes on sale, you run and buy more of it? But when your favorite stock or favorite crypto goes down in price, you want to sell it and not buy it. That's a real sticky mind trap that most people can't overcome. So when you're buying every Tuesday in an arbitrary fashion, you could be buying on a giant green candle, getting horrible fill prices, and be paying 4, 5, 6% more than if you had been buying on the red candles. So there's a real return difference. You're buying
Right.
when there's blood in the streets. You're buying literally the way that you're supposed to be buying. You're selling when those. So just that alone is an economic benefit. But here's another economic benefit. If you're not 50% out of your position by the time at the peak of the blow off top, you're behind the curve. You should
Right.
be dollaring in and dollaring out, and you dollar out through the green candles. So most people, when the price is going parabolic in something, they don't go, let me go sell some of this. That's a very hard discipline to achieve.
Mhm.
And so this is basically forcing you to take profits based upon the goals that you want to achieve. At the end of the day, you want money to change your lifestyle. You don't want a bunch of Bitcoin when you die without ever seeing the economic benefit and the translation to your quality of life, right? So it's all about like, how can I put my money to work? Well, go back to the arbitrage algo. We've established that any healthy accumulation should be intelligently dollar cost averaged in. But what about all the chop to the upside after you've made those positions? So our software keeps track of every trade and keeps track of the cost basis of that trade. So if you make a trade on a big red candle dip and you buy, and that closing price of that buy is at $100,000 of Bitcoin, okay, you're there. Well, if the price continues to go down, you're going to continue to buy on the dips. So that you're going to get this healthy curve entry of price, very balanced. Well, if the price then has a spike to the upside and you're in profit because it keeps track of where your cost basis is. So let's just say I bought at 100, it dips down to 99 and then shoots up to 104 in a day. Well, guess what? You should take 50% of that trade off the table at 104. You should clip it for cash. Why? Because it was an exhausted candle to the upside, and you need to clip cash when things are getting exhausted to the upside as well as the downside. So it's a forced way to have discipline as it pertains to harvesting cash through the volatility that presents itself. And if you go listen to the smartest minds in our space, the Michael Saylors of the world, and they've been saying it for years, and quite honestly, I didn't understand it until about 4 years ago. They say to Bitcoin specifically, but it applies to every equity, volatility is an asset. Volatility is a feature. It's not a discount. And I would hear that and I would go, what does that even mean? Well, if you have this type of a system in play, every time the price dips, psychologically you're going, I just bought the dip. That was a great buy. Every time the price spikes, you're taking half off the table. So you have this 2-to-1 bull bias. So you are accumulating a very healthy bag on a very healthy cost curve, and at the same time you're producing a cash yield off of the value that you have in that brokerage account. That produces a disproportionate returns. That produces a lot of cash opportunities to cycles where the price is trending and channeling. You're just clipping every up and down spike. And that produces so much cash that then if you reinvest into Bitcoin and you take the average return of Bitcoin over the last 16 years is 79%. If that continues, you've got a force of compounding that no one's ever been able to harness in any markets financially since the dawn of time. Like it's so powerful. It can change your entire economic future. Here, let me give you a good example of this. We're working with a lot of businesses that if you listen to Michael Saylor's keynote address at the Corporate Bitcoin Adoption Conference, it will tell you everything way better than I can tell you as it pertains to why businesses should add Bitcoin to their balance sheet. But we are seeing this because customers of ours have businesses and they've come to us and said, we want to adopt a Bitcoin treasury strategy. Well, get a load of this. I can take a company that has 25.7% profit margins net. I can add a 10% treasury component where 10% of net profits flow into purchasing Bitcoin. That doubles their net profit to over 50%. That's the upside potential of Bitcoin.
Right.
So
Right.
you can risk 10% of your available cash. So if Bitcoin goes down by 50%, you're only down 5% against your available. But if it continues to do what it's done, it will double your net profits or equate to 25% net gain against your total dollar amount. So it's just a massive, massive force multiplier. And we're seeing that corporate adoption be the only thing people really want to talk about, and what I think is going to drive a massive, massive price movement in the next couple of years.
That's amazing and so awesome. I know the buzzword in every industry right now is AI. And I know your systems are algorithm based on data and rules. How far are we from a future where like a true learning AI becomes your personal AI financial advisor? And what do you think the dangers of that power is?
AI has tried to be the driving force in trading very unsuccessfully. And here's why. Humans are emotional and AI is not. So if you created a market that was purely driven on AI, it would be highly predictable.
Mhm.
So a human would actually have an advantage. They would be able to harvest that market more effectively than a market that has emotion attached to it. That's why retail traders don't get automation given to them, because it removes their emotion and it makes them more prudent as it pertains to how they enter and exit their positions. I don't think that the forces that control the universe will ever allow markets to be emotionless, because those are very boring markets.
Yes, you're right.
That's a tax-free muni bond. That's not a market. What have we seen with Bitcoin and what have we seen with crypto? Humans like more volatility, more risk, more upside. And that only comes with things that are unpredictable. And guess what? Human beings are the most unpredictable people or a thing on the face of the earth. Everything else has a very natural rhythm to it. And that's why we try to make, pseudoscience out of human emotion through Fibonacci sequences.
Yes.
It's witchcraft basically.
Right. Yes.
And you can curve fit anything. Do you know what that means? Like, yeah.
Yeah, yeah, yeah. I mean, I play around with, I have Thinkorswim or whatever, and there's so many studies on there. Oh my goodness! And then you go to ChatGPT and read about them. Then people are building. I know because your platforms has a partnership with, what is it, TradeStation?
TradeStation, Gemini, we're launching Kraken the 1st of July.
Oh, that's awesome. Yeah.
Yeah, Coinbase after that, and then Robinhood at the end of the
Wow, no, that's
yeah.
amazing. Yeah, so I understand exactly what you're talking about. Yeah, everybody's always trying to. I actually, a couple months ago, I'd have to try it now, but I asked Gemini with, all the quant trading and algorithms that are going on, how effective is charts now, and it may be like a 30-page report on, that they've tried it and it's like 50.
Well, let's reverse the logic and ask ourselves, why are charts valuable? And why are charts used? Well, because it's a way for everyone to get on the same page. It's a concentration of thought.
Yeah. That's so good. Yes. Yes.
So what do the market makers want? Well, they want to know where the liquidity is. And there's market liquidity that they can measure through, the order book, but then there's off order book liquidity. It's you going, you know what? Bitcoin, if it dropped to 60 grand, I'd be a big buyer. I'd mortgage my house. It's all of that. It's the psychological aspects of when you think the asset's in a deep, deep sale price. And so the charts are really a factor of human emotion as well as they can be, but they also, like I told you, they can be used against you. Like they're predictable, right? And so what does that mean? It means like if there's a bunch of highly leveraged positions that are being entered on a support line, the big money they know that if they flush it below the support line, they'll harvest all that money. So what do? They cascade the price, and they can do that because they're a market maker, right?
Yeah, that's so crazy. And, I think this is why it's so important to have tools like you have. But I know you've seen this space from multiple angles, and I know we're heading in kind of a new market cycle. What do you think your single most controversial or boldest prediction for Bitcoin, crypto, or even fintech? What do you think what's going to happen over the next 24 months?
24 months is a little bit shorter of a time frame, maybe 36 months. I think in 36 months, everything that is on a piece of paper will be tokenized. I think your car title will be a token. Your mortgage deed will be a token. All of your securities that you trade, NVIDIA stock, will be tokenized. That the tokenization effort is paramount because it will make our economy the most frictionless economy on the earth, thus supporting the dollar dominance, thus making it a case of national security, essentially. So it will be tokenized, everything. That will allow a lot of new products, new speculative bets, new financial markets to start to pour liquidity into those things. Let me give you a real life example of this that I thought was a pretty novel use case. There's an insurance company that's propping up insurance for flights, cancellation of flights and cancellation of major events, like outdoor events like weddings, baseball games, that type of stuff. And you buy the insurance on the blockchain, and there's real world sensors and API pulls like from the National Weather Service,
Right.
like from the weather.com. And they have all this API data that's coming in that collectively can't be fooled, right? Unless you fooled the entire earth, you could. And the claims are so small that you wouldn't ever have an incentive to fool all of the APIs for that amount of money, right? It would be a worthless cause. But the bottom line is that as a consumer, I could buy flight insurance that if my flight gets canceled, it pays me literally at the airport at the gate. Like it's instantly released to me based upon real world data that's now founded in itself going into a smart contract that releases funds to the shareholders and or to the the insurance holders or the certificate holders. That type of frictionless money transfer is a hell of a lot better than me buying flight insurance and having to file a claim and fill out paperwork. Like, imagine that on scale in every industry. Your iPhone warranty, like everything. And guess what? They know when your phone's broken. How do they know? Because your usage goes to zero. That's API information that could issue a warranty claim and be the ruling party as it pertains to getting a claim paid out or not. So all of that functionality is going to be issued across every single industry, and it's going to change everything to be more efficient, more liquid, faster growing, all of the above.
Yeah, I think that's hugely like supply systems. I think that's where we're going to be extremely efficient. I was talking to a friend the other day and he owns a car dealership and he's like, we don't have AI or anything. We're just guessing on what to order. So it's like a manager that's been there for a while is making those orders, where if you took all that data, you would find out, that certain colors of cars, he was talking about this, in certain weather, that would figure it out. And then to be able to have the OEM, the manufacturer, be able to get that payment.
Correct.
That's where that smart contract comes into play. And I think that will revolutionize the problems that we're having in supply systems. I think through what you're saying, those smart contracts is going to,
Well, yeah, because GPS data doesn't lie. You can make all of these systems automated, and you can bring a level of functionality and a level of liquidity to the market. I mean, think about just the cross-border payments that are sitting in escrow accounts. They're called the Nostra Vostra accounts. It's like $17 trillion. None of that needs to sit there. None of it. It can be instantly settled right now. And I think that's the death of credit cards? No. I think there are a lot of purchases where you want to have recourse. You want to have clawback. But there are a lot of transactions where you don't. And you don't want to sit for 5 days and wait for funds to settle. And you don't want to pay a third-party escrow agent to hold funds because you don't trust the counterparty. Like, there's a lot of reasons that this is going to free up a ton of liquidity.
Yeah, that's so awesome. I know a lot of people with PayPal and having different, in this global economy are having issues with that. I want to ask you one last question. Our time is up. This has been awesome. I could talk to you for hours, but how can somebody get involved? Like the retail investor, we have a lot of founders that are listening to this. They're purchasing Bitcoin. They're doing what they're supposed to be doing. So how would they, if they're interested in your system, if they're interested in their algorithm, what's the way that they could get involved?
Go to archpublic.com. Click on the Bitcoin algorithm or the XRP or Ethereum or Solana algorithm. You can download our algo absolutely free. We want you to see the value in it before you buy anything. The free version will allow you to buy up to $10,000 of Bitcoin per year. So you can use that every year forever at no cost. It's the full feature set of the algos. So you're going to get to see exactly what we've built at an institutional level. And if you're somebody that's a higher net worth individual or somebody that has a company that wants to set up a Bitcoin treasury fund, that's where we can really put our expertise to work for you and help you create instances and buy schedules that are going to accomplish what you want to accomplish. And then you create those instances and you set the software in motion and forget about it, and you achieve your goals exactly how you set out to achieve them. It's pretty phenomenal if you want to accumulate Bitcoin and want to do it as intelligently and as hands-off as you can.
That's crazy. And it's archpublic.com.
Yes, archpublic.com. Like the bridge.
And thank you for your time and for decoding the future for us today.
Well, thank you so much for having me. I really appreciate it.